Hello and welcome everyone to the Squirrel webinar on 11 SMSF myths, fact or fiction. We actually are re-recording this webinar after a live run yesterday because there was poor audio quality, so thank you so much to anyone who stuck it out because we do know that the sound quality wasn't the best, so we wanted to make sure that you have the best experience and are able to get the most out of this webinar session, hence why we're re-recording today. So there won't be a live Q&A feature that we do mention, however we do have the questions from yesterday that we will be running through again. The webinar will last between 30 to 40 minutes. The first 30 minutes we spent talking about the 11 myths and the last 10 minutes were the questions. One disclaimer is that this is general advice only and an SMSF might not be right for you, but this is what we're trying to uncover so that you can do your research and have a well-educated stance on whether or not you'd want to continue with your journey to starting an SMSF. Okay, so to introduce our speakers today, it's not just me, but I'm Sylvie Hall, Head of Marketing and Communications here at Squirrel, and I'm also joined by my two colleagues, Sadi and Noreen. So without further ado, Sadi, would you like to introduce yourself to everyone today?
Hello Sylvie, thank you for having me. Hello everyone. I'll start with a formal introduction of myself. I'm Sadi Islam and I work as a fund accountant here at Squirrel Super. I have about 3 years of industry experience, and throughout these 3 years I've been involved in SMSF compliance, accounting and administration duties for the clients. My job here at Squirrel is preparing and lodging financials and tax return for our clients, and also aid them with information from Superannuation Industry Supervision Act, also known as SIS Act 93 and ATO, in order to keep their fund compliant to the auditor and ATO on a yearly basis. Yep, that's about me.
Great, and Noreen?
Okie dokie. So hi everyone, I'm Noreen and I'm one of the senior associates here at Squirrel. I've been with Squirrel for roughly about 3 years. My role here is all about educating everyday Aussies about some of the benefits of having a self-managed super fund and also discussing their investment strategies and then assisting with the journey of setting up their funds. So yeah, I've got a pretty awesome role here.
Great, so I'm joined by two people with great SMSF experience and expertise to go through whether or not these 11 SMSF myths are fact or fiction. So before we begin, I'll just do a quick intro onto who Squirrel is. Squirrel are an SMSF platform, completely Australian owned, and we help our clients from all over Australia to manage their super fund online and themselves. So what we do is the setup, the administration, compliance, and all the accounting for our SMSF clients. So the objective of this webinar, as I mentioned, is to dispel huge misconceptions around SMSFs and to help you discover if an SMSF might be right for you. So the agenda for today is the 11 myths and whether or not they're fact or fiction. We then did a Q&A yesterday, so we had some really insightful questions from our audience and we'll be running through those again so that you don't miss out on hearing what the answers were. I'll then do a brief overview of how to set up an SMSF with Squirrel and how you can get in touch. So without further ado, let's move on to the first myth.
Here we go.
Woo! Myth number 1. You need a lot of money to start an SMSF. Noreen, do you want to take this one?
Sylvie, this is definitely a common myth. Now, the balance required in your fund does heavily depend on what you're looking to invest in. Say someone who wants to invest in shares or gold, then they wouldn't necessarily need as much as someone who is wanting to invest in property, for example. It is something that used to cost a lot of money. It was primarily accountants looking after the administration, and it was something for people with a substantial balance in their super. But the good news is that the SMSF industry has really shifted and modernised, which has actually led to more competition in the market, and therefore the general cost of running an SMSF has become a lot more competitive. So Sylvie, it's really no longer something that's super costly and only for the wealthy. It's really for anyone who is looking to really take control over their super.
Well, that's good to know. I mean, I know from my perspective that a lot of people ask questions like, do I need at least 200k to get started?
Yep.
So could you let us know what is the preferred amount that you should have before starting an SMSF?
We definitely hear that 200k myth floating around quite a fair bit, but again, it really depends on what you're looking to invest in. Now, with that being said, we do have a minimum balance requirement of 50,000 in your super. So going back to the numbers and the figures, for people who are, let's say, wanting to invest in property, you'll definitely need a lot more than 50,000, but what you will generally need is a minimum a third of the property value in your super, plus some savings aside to cover things like stamp duty, council rates and maintenance costs. So let's throw a number out there. With 150,000, you may be able to get property worth anywhere around the 350 to 450k mark. But for someone who is, let's say, looking to invest in the shares, gold or crypto, then they can actually set up the fund starting with the 50k balance.
That's really good to know.
Yeah.
I guess it also depends on being able to diversify, and the more balance that you have, then the more diversification you can have. So it's always good to have.
Most certainly, yeah. So we do have some clients that prefer to break it down and go property, maybe some in a kitty like a term deposit. So the control is definitely in your hands.
Great. Okay, so we'll move on to myth number 2. That you need a financial advisor to start an SMSF. Sadi, is this fact or fiction?
Sylvie, this is fiction. Financial advisors are only required to aid the trustees with their investment strategy.
Yeah.
So if the trustees are aware of the investment strategy, then they can take their own investment decision to seek return for their retirement savings. However, I would say an accountant and an auditor for your SMSF is mandatory, as the accountant will convert your investments into reportable financials and tax return, which in turn the auditor will review before tax return of SMSF is lodged with ATO. Now, when you're a client of Squirrel, you are actually covered with both an accountant and an auditor, and our team will also provide general advice around the compliance of an investment of your SMSF.
Great. So oh, sorry.
Sorry. Coming to the basic of discussion, if the trustees are not confident enough with their investment strategy and how to grow their retirement savings, then they can always opt for a financial advisor, and the cost can be paid from their SMSF actually.
So yeah, so basically with this one, I guess you don't need a financial advisor if you're confident.
Yeah, if you know how to make money for yourself, you can apply the same theory to make money for your retirement savings through your self-managed super fund as well.
Yeah, but then you always have the option of just using a financial advisor.
If you're not confident enough, you can always go for a financial advisor as well, and the money can be paid out from your self-managed super fund.
Yeah, so it's just up to you, I guess. But myth number 3: SMSFs pay more tax than industry super funds. Sadi, surely this isn't true.
Sylvie, this is a myth as well, and I'll tell you why. So right after when we prepare the financials and tax return and provide it to the trustees, we receive inquiries asking why are they paying tax, and they never used to pay any sort of tax in an industry or retail super. Mm-hmm. Now this is not a true story. All income in an SMSF or a retail or industry super are subject to 15% tax. Now we are not mentioning about the retirement phase where it's not taxed at all. SMSF tax return are lodged with an ATO on a yearly basis after 30th June every year, and tax are applied once the return is lodged with ATO.
Right.
So when we're talking about the industry or retail super, employer contribution are reflected on the account after the tax of 15% has been applied already. So the amount comes in as a post-tax, whereas in an SMSF, employer contributions show up on the bank account as it is, and the tax are applied on it when financial and tax returns are prepared. So it is pre-tax, and they're subject to tax at the year end. On top of that, I would say that in an SMSF, if there were deductible expenses like our admin fee, other investment expenses that is generating the income, then this will also reduce your SMSF assessable income for the year, which would mean in an SMSF, these deductible expenses can reduce the tax status. The bottom line here is tax is applicable for both the structures. However, in SMSF, you have more flexibility in terms of investments to determine your SMSF tax status. So if you have property, you'll have a lot of property expenses that can reduce down your assessable income, say like depreciation schedule can give you more deductible expenses, and this is how you can actually pay less tax in an SMSF compared to where you were there in a retail or industry super.
Right, okay, that's really interesting. So the SMSFs kind of act like a business.
Yeah, it does. All the financials and all the tax returns, they are pretty similar to a company tax return and structure.
Yeah, you mentioned 2 structures there. Were you referring to individual and corporate structures for an SMSF?
Well, in terms of tax, it doesn't matter though, but there are actually benefits out there that Nareen would be able to explain better.
Yeah, definitely. So look, there's a huge difference between a individual and a corporate trust. but unfortunately it's something that isn't explained properly to people when they are setting up their self-managed super funds. Now, in most cases, the structure of an individual trust just doesn't suit an SMSF. Yes, it does cost less and it has a simpler structure, but there are some serious restrictions and setbacks to it. So if you are planning on borrowing through your SMSF, generally lenders won't provide a loan to an individual trust, believe it or not. So I'll explain some of the benefits around a corporate trust.
Yeah.
Now, with a corporate trust, you actually have reduced liability. Now, what this means is that your personal liability is limited only to the assets within your SMSF. This is protection you won't get with an individual trust. Another benefit is that you are also able to add members and remove members with ease. Doing this with an individual trust can actually be a super big pain and potentially quite costly. One other big point is around estate planning. Now, a corporate trust can actually facilitate a single member fund. So if one member of a two-member fund passes away, then the fund is still compliant. With an individual trust, the SMSF would immediately have to appoint another trustee or wind up the fund, which is an unwanted hassle during an already difficult time.
Right, that's so interesting. Thanks for giving us the breakdown of how those two work. And for dispelling the myth that you don't pay more tax, Annie. Okay, so we'll move on to myth number 4. SMSF fees are very high. Noreen?
Yep, no, total myth. Again, it's something that really depends on who is looking after your SMSF. So, for example, if you are getting financial advice with your SMSF, then of course you can definitely expect to pay higher fees. Now, if we were to push the financial advice side of things aside and purely look at the setup and admin fees only, the fees generally become more competitive. Now, with that being said, Sylvie, please tread carefully, as there are still many companies out there that aren't as competitive as they seem from the surface. So guys listening out there, make sure you're scratching that surface and dig a little bit deeper, because as we all know, no two companies have the same fees, and it's all about the inclusions and exclusions that you really have to look out for.
Right, so what kind of price or cost can you expect to pay? What's the spectrum of cost for SMSF?
It is such a broad spectrum. The fees can start anywhere from $1,500 a year all the way to about $10,000 per annum.
Right.
It's such a huge number. Now, again, it's depending on the complexity of the investment strategy. Is it an accountant, who's looking after the fund, along with many other factors as well.
Okay, I feel like this is quite an interesting time to maybe just talk a little bit about what Squirrel offer and our fees and what's included. Would you mind?
Hey, this is my favourite thing to talk about.
Great.
So our fee structure here at Squirrel is one of the main features that actually makes us stand out from the crowd. We've only got 2 sets of fees, which is incredibly refreshing for this industry and I can almost say unheard of. Now, we have a one-off establishment fee, and other than the establishment fee, we have a fixed administration cost of $110 a month plus GST, and it actually covers everything from all the accounting services all the way to your tax lodgements and also the auditor's costs. We offer our clients total peace of mind that they aren't going to be left with any nasty surprises, as we sadly hear too often about. Plus, one last and one big benefit is that all our fees come directly from the fund, so there's no out-of-pocket expenses per se.
Oh, that's great. We do have a comparison table of our fees and services compared to other providers in the market. So if you are interested in seeing that, if you email hello@squirrelsuper.com.au and put 11 SMSF myths in the subject line, then we'll be able to send you that comparison table, no problem. Okay, so we'll move on to myth number 5. SMSF administrators take commissions and have hidden fees.
Okay, I'm going to say myth on this one. Now, it's a myth because not everyone does take commissions. However, it is a common practice in the industry.
Right, okay.
So, at Squirrel, we don't accept it for a number of reasons, because we're really all about putting our clients first. So, first point is that we really want to be able to pass the flexibility for our clients. So, for example, if they've got a preferred share trading platform, then we want them to be able to use those platforms. platforms. So also it does then impose restrictions if we do take commission. So we don't want to hold back our clients on things that can actually be beneficial, and it's not just for our own personal gains. So for example, if you are after lending and you find a great offer and a great interest rate out there, then we want our clients to be able to take advantage of that. The final point that I do want to make, Sylvie, and it's to me probably the most important one, is that we want to be totally transparent and trustworthy with each one of our clients.
Yeah.
So that's pretty much where we stand when it comes to commissions.
No, and I think it's a good point, because we actually did run a survey with our clients and found that 72% of them said it was a deciding factor to actually go Squirrel over another SMSF provider. So yesterday when we did this webinar live, we put out a poll for everyone to kind of have their say and say what they think. And the poll asked, does a company accepting commissions or kickbacks affect your decision when considering signing up with them? And this was specifically for financial services. And the results of the poll were pretty insightful. 80% of the audience yesterday said that it did.
I'm also kind of not surprised.
Yeah.
So no, that's awesome to hear that kind of feedback.
Yeah, it's good to know that we're doing that part really well and right by people. So yeah, that was a really interesting thing to discover as well, and validate what we already knew.
Yeah.
Okay, so myth number 6. SMSFs investing in property can't diversify their portfolio. Sadi?
Absolute myth, Sylvie. There are no laws stopping the trustees to diversify their SMSF portfolio. So what usually happens is, given that a property or assets of higher value, so when the fund purchases a property outright, they're actually not left with any cash to invest elsewhere. But the best part for an SMSF property investor who is willing to diversify as well is the availability for an SMSF to apply for a loan in order to leverage its property purchase through limited recourse borrowing arrangement. This is also known as an LRBA. So I would say if they purchase their SMSF property through an LRBA, they can use up the cash left in the SMSF to invest elsewhere in order to diversify their portfolios. They can invest in managed funds, they can invest in shares, whichever compliant investment they wish to. But if they leverage their property purchase through a loan, then only they'll have the money to diversify.
Yeah, so I guess there's benefits and pros and cons to an LRBA as well, and I guess it also depends on the balance that you have individually and the price of the property that you're looking
definitely
to invest
that matters a lot.
Yeah, okay, great, that's good to know. Moving on to myth number 7. All SMSF loans are being discontinued. Well, so this has been big news.
Well, it has been a very big news, but unfortunately it's a myth as well.
Yeah, or fortunately, I would say. It is, for SMSF investors out there, this is a fortunate myth.
Alright, anyways, as I've mentioned, SMSF loans are arranged through limited recourse borrowing arrangement, and it is a very specialized and complex structure which requires extra cost and attention.
Yeah.
So although the big banks have pulled out of it, however, there are plenty of other providers still on the market, including Squirrel Loan, which we have started recently. So I would suggest who are planning on getting a loan for their SMSF to do a quick search online, and they will come across various SMSF loan providers with different rates, and they will also come across Squirrel over there. Just have a look on Rate City, I think. Yeah.
You can do comparison on there, or you can head to squirrelsuper.com.au/SMSF-loans and check out the rates there too. Great. So myth number 8. Renovations are banned on SMSF properties.
It's a complex one. It is actually kind of like a myth, but then again it's a fact. It depends on, I would say it is true to somewhat extent for leveraged property through LRBA. However, renovations can actually be carried out in an outright property, and the cost will form part in the cost base of the property. It cannot be written off as a deductible expense. Now, coming back to the renovations in an LRBA property, the arrangement of a limited recourse ensures that loan has been provided to SMSF is backed only by the property acquired. ATO have been very strict to ensure that an SMSF can opt for such a loan only when it is a single acquirable asset. And if a renovation is carried out on the asset, which creates a replacement asset out of it, then the arrangement for a single acquirable asset will not stand, and such a renovation will be banned actually. In short, for LRBA property, a renovation which is creating a replacement asset is not allowed. However, renovation which is not changing the nature of the asset is allowed.
Right, what do you mean by a single acquirable asset? Can you give an example of what that
Sure,
means?
Sylvie. Let's assume that an SMSF have managed to purchase a vacant land through limited recourse arrangement, and later a residential premises has been built in that land.
Yeah.
This will result in the nature of the asset changing from the original vacant land status to a residential premise status.
Right.
Now, such an improvement and renovation on the asset will not be allowed as the nature of the asset has been changed and the limited recourse for the acquired asset is not valid any longer. Similarly, I would say if you convert a residential premises with renovations to convert it into a commercial property, then the nature of the asset has been changed over here as well, and the arrangement for the LRBA will be breached because it's not sticking to the original status of its LRBA arrangements. So there are plenty of other similar restrictions in which through a renovation for your SMSF will be in breach if the property has been acquired with an LRBA. But if it's outright, then the trustees can renovate it in any way they want to.
Okay, but also I guess this means like big structural changes, and like you can't change residential properties into commercial. You can't necessarily like add a swimming pool, but you can do maintenance. And
You can do maintenance because these are necessary. Swimming pool is also doable, but it has to come out from the cash money of the SMSF. Cannot come out from the borrowing.
Right. Okay. Well, that's interesting. Good
As
to
long
know.
as it's not changing the nature of the asset, it's all fine. And has to come through the cash portion of your SMSF. Cannot come through the borrowing portion.
So I'd say this myth is a kind of mix of fact and fiction, a faction, we'll call it. And we'll move on to myth number 9. SMSF members that invest in property are always experienced property investors.
No, I'm going to say myth on this, Sylvie. So, look, based on my experience and generally the people I speak to, it's normally their first or second property.
Right.
Now, we understand that it may be something that seems a little bit daunting to start investing in property through your super, because we understand super is such an important part of our retirement. But that's exactly what our experienced fund team is here for, just to give you that step-by-step guidance with the investment itself. Of course, no financial given, but general advice on what you need for your property investment as an example. I'll let Sadi talk a little bit further about this.
Okay.
Well, we have our accounting and operations department here at Squirrel, and we have always provided general advice to the trustees before they invest in order to guide the trustees with relevant rules to keep their fund compliant.
Yeah.
So it is highly advisable that the trustees approach us with their investment strategy so that we can advise if it will be a compliant or not compliant investment and what sort of documentations are required to pass annual audit for that particular investment that the trustees have on their mind.
Okay, so I guess with this one then, the great thing about being able to start an SMSF to invest in property is that many people don't necessarily have a large deposit to buy a property and do an investment with, but if you use your super balance and you can combine your super balance with a partner or husband or wife, then you might have that deposit readily available to do that. So if you want to get on the property ladder, it could be a good strategy for you depending on your circumstances, and we do help every step of the way, as that we were saying, like documentation and making sure it's all legit.
Yeah. Well, on the point that you mentioned about couples joining up, it is also one fee per fund, and that's another benefit that some couples take a part of as well.
Yes. Another benefit of Squirrel. Oh, great. Okay, good to know that that's a myth. So we'll move on to number 10. Second to last myth now, guys. And that is that SMSFs can't buy assets from a related party.
It is a fact, Sylvie, that an SMSF cannot buy assets from a related party. You see, an SMSF is only for saving up for your retirement benefit, and ATO sees that purchasing from a related party will not be at arm's length and members can get current present day benefit out of it. What can I say? These are the rules set by ATO and all SMSF must comply with it.
Right.
However, there are exceptions in terms of purchasing shares from listed market, as it has got a live market, and disposing the shares on the market or to SMSF will have no member benefits at present day. Also, ATO allows an SMSF to purchase commercial property from related parties, but there is a big list of criteria from ATO that is required to be met, mainly surrounding the arm's length transactions when you're purchasing a commercial property from a related party.
Yeah, I think this is a really interesting loophole that as a business owner, you can buy a property that your business can operate from through your SMSF and then lease it to your business. Is that right?
Yep, all you need to do is keep everything at arm's length market value.
Yeah, so you're not paying rent to your landlord, you're paying rent to your SMSF, which then over time will...
You are actually paying rent to grow your own retirement.
Yeah, it sounds like a perfect plan for business owners. Great, okay, thanks for dispelling that. Okay, myth number 11. Last but not least, oh gosh, SMSFs are time consuming and require a lot of admin. True or false?
That's 100% true, I would say, Sylvie.
Yeah.
The process is very time consuming and involves converting various documentations of your SMSF investments into a reportable financials along with the audit trail documentations for the auditor. And SMSF is highly regulated by ATO and they ensure through a yearly audit carried out by the external auditor that it is meeting the sole purpose test for saving up only for retirement. The SIS Act that is governing your SMSF, believe me or not, it's over 600 pages, and a professional is definitely required to ensure that the fund is compliant accordingly and it's following the rules that are there in the SIS Act also on their trust deed. But this doesn't end here because it's a two-way street. The accountants and the auditor will do their work, however, the trustees will need to also give their inputs to it.
Yeah.
They have a lot of duties as well apart from their investment decisions. So they need to provide their SMSF investment documentation to the accountant so that the accountant can reconcile their accounts and show it to the auditor. In a nutshell, I would say an auditor is a must for an SMSF and an accountant is similarly required to convert your SMSF investments and operations documentations into a reportable and financials tax return so that it can be lodged with ATO every year.
Yeah, I mean, it sounds to me like it's a lot of work for you, Sardis.
Definitely, it's a very big process that I need to go through every time then when I finalize a self-municipal fund.
Yeah, so time consuming, especially for the fund accountants at Squirrel. But I mean, I guess for the actual trustees, the time that you need to spend and the amount of admin depends on the investment. Would that be true?
Absolutely. So again, going to the point of Sardi made, it is typically quite time consuming and whatnot, but that's exactly what Squirrel is here for. So again, depending on the investment strategy itself, let's say for example for someone who is wanting to invest in property or shares or crypto, it could require a lot more time than let's say someone who's investing in gold and a term deposit, which requires a lot less time. So we do try to make, I guess, the process as simple as possible. However, there is still, like he said, is a two-way street.
Yeah. Great. Well, thank you so much, Noreen and Sadi, for answering these myths and seeing whether or not they're fact or fiction. We're now going to move on to the Q&A section. We had some really great questions yesterday, so I'm just going to read them out and we'll see what the answers are. So the first question was from Tim. And he wanted to know if he could transition an existing individual trustee fund over to Squirrel into a corporate trustee, and does the old fund need to be wound up?
Definitely a fund which has an individual individual trustee structure can convert into a corporate trustee. However, given that the fund has been established already, their investments must have the individual trustee's name on it. So when we are converting into a corporate trustee, it might affect the platforms that the SMSF is using currently, because we need to change the names to the corporate trustee. And this is doable, but it might involve a bit of cost for the trustees because the platforms might charge money on changing the structure.
Right.
Apart from that, if all the investments are correctly done, if there are no investments, just the bank accounts, then it's a very easy peasy job.
The next question was from Kevin. How much do I need to get started to invest in property through an SMSF?
Hi Kevin, great question. As we kind of explained a little bit earlier, it really does depend on the value of the property that you're looking at, and also the balance in your super as well. So typically you do require that 1/3 minimum as the deposit. Plus the savings aside to cover the things like the stamp duty and maintenance and things like that. Now, when you are looking at investing in property through super, one of the things to remember is that you can't put down any deposits from your pocket. Every penny has to come from the super fund itself. So we'd be more than happy to discuss this a little bit further. Just give us a call or pop us through an email and we'd be more than happy to go through that there with you.
Great, thank you, Noreen. The next question was from Tom, and he wanted to know if he can invest in cryptocurrencies, and if so, how does it work with CGT, capital gains tax?
Definitely, Tom, you can invest in cryptocurrencies. The main issue that lies to pass the audit is the holding name of the platform that has been used. So if you want to purchase cryptocurrencies, you must ensure that you open up a platform account with either of the 4 suggested cryptocurrency platforms that we always suggest, which is CoinSpot, Independent Reserve, Ainzal Bullion, and the other one is Noreen, you might know.
Bitcoin Trader?
Bitcoin Trader, yeah. So if you invest through these 4 platforms, then they allow you to open up an account in your self-managed super fund name. The basic question is you must keep all your assets separated from your personal assets, all your personal assets separated from your SMSF assets. So when you open up an account in your self-managed super fund name, you have invoices for the cryptocurrency purchases in those names. So this is how you can actually purchase these cryptocurrencies, and you can either hold them in the platform or you can transfer to a cold storage. Now with the question with capital gain tax, a capital gain would only arise if you dispose your cryptocurrencies. If you hold on to them and then if the market value rises or declines based on your holdings, they won't have any sort of capital gains because it is an unrealized gain.
Yeah.
The capital gain tax will be only applied when you realize the gain, which is by disposing all this, the currencies that you hold.
Okay.
Also through regarding capital gains tax, let's say if you were to sell, and this actually applies with most assets if I'm not wrong, Sadi, is that if you were to hold it within, and let's hypothetically say you bought it today and sold it within the first year, it would get taxed at 15%. After the first year, drops down to 10%. However, if you were to sell it come retirement age, there is no capital gains tax on that.
Yeah, definitely. So it's more like parcel to parcel. The parcel that you have bought today, if you sell it after 1 year, then that particular parcel would have 10% tax applied on it. But however, if you bought a parcel, say like today, and if you sold it 1 month from now, that parcel would apply 15% tax.
That's so interesting. Oh, that's such a massive tax benefit for
Absolutely.
an SMSF.
Yeah.
Great, thank you. So those are all the questions for today. As we said, if you've got any questions that you'd like to speak to our team about, Noreen and Sadi are always available to answer your questions. I'll just give you a bit of a brief rundown on setting up an SMSF with Squirrel. So we handle the establishment, setup and registration of your fund, and we have unlimited customer service here. So you can call us, email, come in to see us at our Sydney head office, and we're always available to speak with our clients and help make sure that they're compliant with their fund. You'll also get unlimited access to our resources and educational material. And we really pride ourselves in the fact that we like to help our customers and be there for them every step of the way.
Yeah, look, we really like to go above and beyond for each of our clients. So we're not just saying it, we actually mean this.
Yeah, so if you do want to get in touch, if you've got any questions, then you can call us on 136887 or email us save@squirrelsuper.com.au. or check out our website squirrelsuper.com.au, and you can go to the blog and find some great reading material if you want to continue your research into starting an SMSF. So thank you very much for listening. It's been a pleasure to do this webinar, and we hope to see you soon.
Thanks for joining, everyone.
Thank you.
Bye now.